Hi team, Claire here from My Mortgage, and today wanting to talk a little bit about rising interest rates. Why are interest rates rising, and should you be worried? Firstly, why are interest rates going up? Well, essentially the Reserve Bank of New Zealand, who is responsible for controlling monetary policy, they are looking at trying to regulate house prices and sort of contract lending in a way. What that means is that the OCR, our official cash rate, has increased most recently in October by 0.5%. What does that actually mean? Well, the official cash rate is the rate at which banks can borrow money, and essentially it's linked to a floating interest rate and also largely to fixed interest rates as well. So we've seen an increase in fixed interest rates from around about that sort of early 2% range up to the sort of mid 3% range now, and the increase in floating rates has now been passed on by about 0.25%. So overall, what should you be looking at the moment? Largely, we always say focus on your own situation. What's going on for you at the moment? How's your job? Is it stable? What's your family situation? What are you likely to want to be doing within your in property? Are you wanting to buy other property? Are you wanting to sell and downsize? Are you wanting to build? Do you want to increase your repayments? What is the biggest thing for you, and what financially is the best thing? Secondly, how much can you afford to pay? Can you absorb a rate increase over time? What might that look like? And how much can you afford for the rates to go up in the next 2 to 3 years? And those things there, when we start asking those questions, they allow us just to look at what the risk profile is for you and your situation, and how might we mitigate it. In terms of builds and interest rates, I'm getting a lot of questions from people who are taking the either Back My Build or Blueprint to Build product from ASB and ANZ, and worried about the interest rates going up while they're building. And because these discounts are connected to the floating rate, that they might sort of fluctuate over time. Yep, that's absolutely true. At the moment, the Back My Build, Blueprint to Build, is sitting between 1.89 and 205%, depending on the situation. And fixed interest rates are sitting sort of between 2.75 and 4% for sort of the longer term rates. So it's a pretty big difference between the two. For people who are concerned about not having enough income to meet the increased rates, possibly that might be coming in the next 12 to 18, 24 months, I'm saying that we can actually hedge the bets. With Blueprint to Build and Back to Build, you actually do need to stay on those products to be able to continue to access them, i.e. if you fix, you can't go back. But there are really good ways that we can split up that lending to reduce your risk profile slightly, if that might suit you better. So overall, what's the moral of the story? Your situation is the most important thing in this case. So making sure that it's the right fit for you is mandatory and really important to us. So if you'd like to review your lending, get in touch with us. We can give you some advice about the best fit for you, and we can help manage that process into the future.